All right, let's start with the deep recession scenario and just get this one out of the way. Your pick for that? Constellation. It's down just 3% this year. They had better than expected earnings last month. And, well, people think booze is kind of recession proof. You like it?
I do like it, and actually I like it even more than some of the pure single brand plays because they're a little more diversified. And we've seen already, the stress test is already on the books. They can defend in a downturn. And we've also seen them increasing profitability. I mean, the big concern with a lot of these brands is what do you do, how do you deal with rising prices? But they have managed to do that. They've branched into seltzers. They're now getting into recreational marijuana. So we have all sorts of choices for a deep recession, depression kind of scenario that involves booze and pot.
Oh, goody. To be clear, is this one of those where we know if there's a deep recession? I don't think that's priced in at this point. You think all these, stocks go down, but you're looking for relative outperformers? Is that the idea?
Yeah, that is the idea. I mean, we're looking for companies that can deal with, because we have a recession with inflation. We have not had that in most of our investing histories, unless you're, up there. And so, at the end of the day, we need companies that can manage their costs, whose brand is durable, and who will continue to sell product so that you can survive the tumult.
All right. So your next pick is for a mild recession. If you're in this camp, think that's what's going to happen. You actually pick Disney, which has been, it feels like, in a mild recession of its own.
Disney has definitely taken its lumps through the pandemic. Closing down the parks was an enormous hit to Disney. Everything to do with sports hit ESPN+. So they really kind of took it on all sides, closing down all of the studios as well. So there was just not a lot going on. And, Bob Chapek was really having a trial by fire as a new CEO at Disney as well. However, we now have the parks open. They just reopened Shanghai Disney. The parks are already kind of starting to normalize in terms of their numbers. They're growing like gangbusters again. And obviously that will normalize. But the point is, these are probably some of the most incredibly profitable components of Disney. And they've upped their pricing with absolutely no response in terms of demand, which is to say that Disney has incredible pricing power.
All right. Go ahead.
And on top of that, Disney Plus is still growing subscribers while Netflix is losing subscribers. And they have the ESPN Plus Hulu bundle, which right now nobody has. And that was sort of the cable story.
Right. Well, I hear some buzz about it. So that's your mild recession pick. Disney is. Now let's turn. If you don't expect a recession, if you're in that camp, Gina, then you say the pick is J.B. Hunt. Tell us why.
Yeah, so we have J.B. Hunt Transport. Lido has owned this in several of our portfolios. And this story is really one where J.B. Hunt Transport is obviously a company that benefits when people are buying goods, demanding goods, and you need to transport those goods. And obviously a big part of the story lately has been what happens in the supply chain. J.B. Hunt has managed to increase their profitability. Demand is off the charts. So you're like, wow, is there really a recession coming? But even in a recession, they've actually done incredibly well this year. So, on a relative basis, I mean, nobody did well this year, but on a relative basis, they performed. And from our perspective, from a valuation perspective, we think that this is a way to invest in a good company that can control its costs, but also might participate in the upside if we're all wrong.
All right. Well, in the stock to bail on, which that brings us to, drum roll, please, which you don't seem to like that much regardless of what exact kind of slowdown we're heading into, General Electric. Tell us why.
So, General Electric got really cheap for a while, and it was attractive when, it was at a really low valuation. But that valuation gap really went away as everybody was buying anything that looked like value. And General Electric looks like value, smells like value, but it doesn't necessarily perform well in a recession because, the industrials are really going to get hit. And they're in aviation. They're in, maybe the healthcare part of what they're doing might be somewhat resilient, but, they're most of the GE, brand is going to be hit in a recessionary scenario. So, this is a company that already is going through a lot of figuring itself out strategically. So we think we stay away from that if we actually go into a deeper recession than expected.
All right, we'll leave it there. But with what little time we have left, Gina, you get to take a quick victory lap on Snap, because I almost associate you single-handedly with bailing on Snap in pretty much every edition of this that we've done.
Yes, I definitely took a few victory laps on that one, Kelly.
Not to dance on any graves
for my
here,
victory
but
lap.
yeah, gotta give credit where credit's due. Gina, thank you very much. Have a great weekend.